Hello everyone. India's logistics powerhouse Shadowfax is here with its IPO. With a 23% market share in e-commerce shipments and a tech-driven approach, they are redefining delivery. But can they sustain growth and expand their footprint? Watch till the end to find out what's driving Shadowfax's journey and what's in store for investors. Listing gain possible? Shadowfax's revenue streams are diversified across three key segments. First, e-commerce express contributes 68.6% of revenue, driven by partnerships with major e-commerce players like Meesho, Flipkart and Myntra. Second, hyperlocal accounts for 19.9%, powered by collaborations with food delivery and quick commerce giants like Swiggy, Zepto and Blinkit. Third, the remaining 11.5% comes from other logistics services, serving various e-commerce, retail and logistics clients. Some notable clients include Flipkart, Meesho, Myntra, Swiggy, Zomato and Zepto. With a strong client base and tech-driven approach, Shadowfax is poised for growth. The company's asset-light model and proprietary technology enable efficient logistics operations, making it a key player in India's e-commerce and hyperlocal delivery market. Shadowfax Technologies' financial performance shows promise. With a profit of Rs 6.43 crore in FY25 and 21.04 crore in H1 FY26. However, let's put things into perspective. A significant portion of this profit came from non-operating activities, contributing 14.2 crore rupees in H1 FY26, which is 67%. This means not all profit is due to operational efficiency, which is a very important thing to consider. On the operational front, revenue grew 31.8% to Rs 2,485.13 crore in FY25. However, we need to keep an eye on lost shipment costs, which jumped 49% to Rs 141.03 crore in FY25 and stood at Rs 148.2 crore in H1 FY26, around 8.2% of revenue. This increase could impact profitability if not managed effectively. Shadowfax's debt also increased to Rs 147.44 crore in FY25, which might be a point of concern. In conclusion, while Shadowfax shows growth potential, it's crucial to monitor both operational efficiency and non-operating income. Stakeholders should keep a close watch on lost shipment costs, debt management, and revenue growth to ensure sustainable profitability. Shadowfax Technologies' post-IPO PE ratio is around 170, indicating a premium valuation compared to Blue Dart Express 52.32, but relatively lower than Delivery 218.18. But considering Shadowfax's recent profitability, the PE comparison might be less reliable, and it's not a like-for-like comparison given the size difference. Delivery's revenue is around 4 times that of Shadowfax, so its high PE ratio is expected. However, looking at the price-to-sales or PS ratio, Shadowfax's valuation appears reasonable compared to Delivery, with a PS ratio of 2.8 for Shadowfax and 3.2 for Delivery. Blue Dart Express has a PS ratio of 2.16, so Shadowfax's valuation looks premium based on PE, but its PS ratio indicates a relatively decent valuation compared to peers, considering its growth prospects and asset-light model. Next, strengths. Shadowfax Technologies is India's fastest-growing 3PL player with a 23% market share in express services. Their asset-light model reduces fixed costs and enhances scalability. Revenue grew 32% in FY25 with a profit of Rs 6.43 crores. They serve e-commerce, quick commerce and D2C brands like Flipkart and Meesho. Their proprietary tech platform optimizes logistics and reduces costs. Risks. However, Shadowfax faces risks like high client concentration, with top client, which is Flipkart, contributing nearly 50% of revenue. Logistics is a low-margin business, with net margins below 2%. They compete the delivery and e-com express and rely on gig workers, posing operational and regulatory risks. The PE ratio of Rs 170x indicates high growth expectations. Before final verdict, let's look at the IPO details. IPO opens Jan 2022 to 26. Price band 118 to 124 rupees. Total size 1907 crore issue with 1000 crore fresh issue and 907 crore OFS. Retail allocation 10%. Listing on Jan 28, 2026. Registrar KFin Technologies. Finally, things to consider for this IPO. Geopolitical uncertainties are looming, the grey market premium is low, and the anchor book is yet to be disclosed. These factors could impact IPO performance. For safe investors looking for a big listing gain, this IPO might not be the best fit. The company's valuation, recent profits, and intense competition in logistics are concerns. So, for safe investors, avoid or approach with caution. But risk takers, Shadowfax's growth prospects, asset-light model, and improving profitability make it an interesting bet. So, for risk takers, keep an eye on the subscription, consider investing if QIB and HNI interest is strong and GMP is stable. Thank you, please like, share and subscribe to the channel.